I'm Sabina CPA. I advocate less taxes and more profits. Today, I'd like to talk about 5 surprising taxable items. Wages and self-employment earnings are taxable, but what about the random cash or financial benefits you receive through other means? If something of value changes hand, you can bet the IRS consider a way to tax it. Here are 5 taxable items that might surprise you. One is scholarships and financial aids. Applying for scholarship and financial aids are top priority for parents of college-bound children. But be careful, if any part of the award your child received goes towards anything except tuition, it might be taxable. This could include room, board, books, travel expenses, or aid received in exchange for work, for example, tutoring or research. The tips are, when receiving an award, review the details to determine if any part of it is taxable. Don't forget to review state rules as well. While most scholarship and aid are tax-free, no one needs a surprise at tax time. The second is gambling winnings. Hooray, you hit the trifecta for the Kentucky Derby, but guess what? Technically, all gambling winnings are taxable, including casino games, lottery tickets, and sports betting. Thankfully, the IRS allows you to deduct your gambling losses to the extent of winnings as an itemized deduction, so keep good records. Tips. Know when the gambling establishment is required to report your winnings. It varies by types of betting. For instance, the filing threshold for winnings from fantasy sports betting and horse racing is $600, while slot machine and bingos are typically $1,200. But beware, the gambling facility and state requirement may lower the limit. The third surprising thing that could be taxable is unemployment compensation. Unfortunately, the IRS doesn't give you a break on the taxes for unemployment income. Unemployment benefits you receive are taxable. The tips that you can use is that if you are collecting unemployment, you can either have taxes withheld and receive the net amount, or make estimated payments to cover the potential tax liability. The fourth surprising thing is crowdfunding. A popular method to raise money for new ventures or to support a special cause is crowdfunding through websites. Whether or not the funds are taxable depends on 2 things: your intent for the funds and what the givers receive in return. Generally, funds used for a business purpose are taxable, and funds raised to cover a life event, such as special causes or medical assistance, are considered a gift and not taxable to the recipient. Tip: prior to using these online tools to raise money, such as GoFundMe, review the terms and conditions and ask for a tax review of what you are doing. If you need to account for taxes, reserve some of what you raise for this purpose. The fifth surprising thing that could be taxable is cryptocurrency. Cryptocurrencies like Bitcoin are considered property by the IRS. So if you use cryptocurrency, you must keep track of the original cost of the coin and its value when you use it, so the tax on your gain or losses can be properly calculated. Remember, the tax on property can vary if you own the cryptocurrency more than a year, so record all dates. Tip: for those considering replacing cash with things like Bitcoin, you need to understand the gain or loss complication. For this reason, many people use cryptocurrency to do so for speculative investment purpose. When in doubt, it's a good idea to keep accurate records so your tax liability can be correctly calculated and you don't get stuck paying more for what is required. If you find this video useful, please click on like, subscribe, and forward to those who may also benefit from this tutorial. Please also head to baycpaplus.com to sign up for our email newsletter full of tips for less taxes and more profits. Until next time, God bless.